Thank you, and welcome everyone to this informative session that will look at crucial changes in accounting standards that affect all of us. Today's session is sponsored by Intact, a leader in nonprofit accounting software. New changes bring new opportunities to meet the demand for more accountability by stakeholders, whether it's regulators, staff, boards, or donors. With transparency and focus, today's national expert will look at how accounting systems can effectively meet and comply with new accounting and financial management demands, such as how to implement internal controls to ensure accountability, and how to provide transparency to show compliance with funder requirements. Leading the discussion is Jacki, who started her own consulting group in 1991 to help nonprofits better understand and use effective accounting and technology tools. Several years ago, JMT migrated its internal systems to the cloud, and after experiencing the benefits, Jacki is a leading proponent of cloud systems for nonprofits. She brings 25 years of experience to the nonprofit sector and gained national recognition with Accounting Today's Technology Pacesetter Award, a VAE 100 member, and she was featured on the cover of Accounting Technology magazine. She was also named to Sage Software's President's Circle. Her passion to help clients make a difference brings that vision to us today. To begin our session, Jacki.
Thank you, John, and thank you, everyone. It is a pleasure to be here. And I also definitely want to thank Intact for sponsoring this session. Intact is one of our go-to partners. As you can see, we have a lot of nonprofit organizations. We only work with nonprofit organizations, and one of the main reasons that we find Intact to be such an excellent partner is the solution is really, truly excellent, not the least of which is that it is recommended by the AICPA. So let's start talking about everything that's going on in the not-for-profit area around accounting standards and the various regulations and everything that are changing. So probably everyone is now aware that the accounting rules have changed. The FASB in August delivered the ASU 2016-14, and it's officially titled Presentation of Financial Statements for Nonprofit Organizations. So it is really about all those financial statements and what goes into those financial statements and how they're presented. It's been in the works for a couple of years, so hopefully it's not a surprise to anybody on this call. And basically what has actually been approved and flowed through is around these four main categories, and I have a slide for each one of those, and we'll go into them a little bit more. So the first one, of course, was the biggest one, and that was the net asset classes, and they went down from our current three classes, the unrestricted, temporarily restricted, and permanently restricted, down to two classes. And they also had made decisions around investments and how they're presented included. They also have guidelines and requirements on the liquidity representations. And then there was a number of other reporting changes. And as I said, I have slides for each one of these. So the big thing I want to really keep in front of everybody is there were a number of things that the FASB was reviewing, and so right now this is really phase one, and they're all around these particular items which I highlighted on the previous slide. So this is just a sort of a graphical presentation of that. The big thing that they deferred was around financial performance measures or how operating measures are tracked. And that is going to be in their phase two. They, put it off primarily due to the challenges in how to determine what performance measures mean to different organizations. So for example, a Meals on Wheels organization is much different than a community health center. And so how do you standardize the definition of performance measures? And so it's been pushed back, but I have absolutely no doubt that it is going to be coming. And the good news is that many organizations already are looking at some of what would be considered KPIs or outcomes just already as part of their mission delivery. And so a lot of this sort of baseline work is going to be in your organization already. And so we'll wait to hear what's happening with Phase 2. So let's continue on and now look at a little more detail about the 4 main changes. So I mentioned the net asset classifications. So on the top part above the line is basically where we were currently, and we will be until this takes effect. And I have a slide further in the presentation where we talk about the timeline for this. Below the line is what the new presentation is going to be. So basically we're collapsing, as I mentioned, the 3 classifications down to 2. And so basically it is going to be with donor restrictions and without donor restrictions. And then of course there's disclosures with both of these, and here again I'm going to have another slide about disclosures because very, very important throughout the update. Disclosures have been expanded in terms of what the requirements are. So for your financial statement presentation, whereas you now have perhaps on a columnar basis, you're unrestricted, you're temporarily restricted, and you're permanently restricted in 3 columns with a total. Now you're going to have 2 columns. So here's where I want to talk about the expanded disclosure. So one of the key ones here is that is really, really important is that the FASB felt there needed to be very, very clear disclosure around what was happening on the endowments. That there were a number of situations, especially with the economy and the recession, the Great Recession that we had, that there were underwater endowments, and there was not good visibility to these endowments in the current, under the current rules. So basically, they significantly expanded the note disclosure requirements on these endowments, the underwater endowments. And so you have to include, you have to have a written endowment policy and any actions that were taken during the period that you're reporting upon for those underwater endowments. You have to include the fair market value of the endowed funds, the original gift amounts, or the level that was required by the donor. So you really have to disclose information very clearly. And so that one was a really key one. And I also recommend that you, throughout this, you want to make sure you speak to your CPA firm, your partner, and really understand with them the impact that any of the new changes may have for your organization. Additional disclosures where, on the restrictions on funds, you really have to disclose the amount, the purpose, the type of fund, describe how and when the funds can be used and when they're released and why they were released. And this includes on board designated funds as well. So it really, really is expanded. And I had a separate slide here because I really wanted to make sure these 2 particular ones are highlighted when it comes to your disclosures. Investments. So here the visibility issue really wanted to be expanded upon again. So the FASB in the new update, they want to ensure that you present the amount of the change in each net asset class for your investments. And they also felt it was important to include a net number for all of the investment expenses, both internal and external. And this was really key to, here again, visibility. The entire framework for everything that came through in this update was to provide visibility and standardization across financial statements for all nonprofit organizations. Liquidity, here again, note disclosures. So basically liquidity came down to, two definitions, the qualitative and the quantitative. And so, the qualitative is they want to have you disclose what's the status of your liability and the availability of funds within 1 year of your statement of financial position, or your balance sheet in essence. And then the quantitative is the availability of your unrestricted liquid assets, cash, as of the date of the statement of financial position, your balance sheet, to meet your operating needs within 1 year. And so what they're trying to do here, and we all have heard, of the unfortunate situations of many organizations going under, and many large ones going under, is to provide the reader of your financial statements the ability to understand and see that you have the funds, the liquidity, to meet your operating needs for the upcoming year. This is, here again, more visibility, more ability to hold the organization with its financial statements accountable to looking forward. And so this one is a really key one, and it is going to be difficult for many organizations. Now, some other reporting changes that have come through is around expenses. Now, everybody is very familiar with the statement of functional expenses. It's probably one of the dreaded statements that so many of our clients struggle with, often done outside of any kind of automated system and work through Excel. It is now going to be, it's a requirement, and it has to be reported by both nature and fun. It used to be, many organizations did it and included it in their financial statements, and it was really excellent. But it used to only be required by health and welfare entities, and that's now changed. So the good news is many organizations already do this. Our CPA firm partners are wonderful about this, and it's not going to be something new that's added, but the format is going to change a bit about it. The thing is, it can be included as part of the statement of activities, or it can be as a separate statement, which so many of our clients actually do, or it can be summarized in the note disclosure. So you have a couple of different, if you're not currently doing it, you get with your CPA firm and you talk with them about how to include it. And part of the disclosures also has to include the methods that you've used to allocate costs between the different program areas of your organization and the supporting activities, the general administrative side. The other reporting change that's come about is on the cash flow, and you can actually now decide whether to use the direct or indirect method. And this is this one here I think is a great change. I know for most of our clients, the cash flow is another one of those statements that is very difficult and often not even looked at because it's not understood. And we're a very big proponent that the cash flow should be utilized in a part of every organization's monthly statements, financial packet, or at a minimum their quarterly packet, and really being able to understand it and have it resonate with how it's done. So this allows you to actually change the method to be one that I think is more understandable for many organizations. And if you do use the direct method, you don't have to do a reconciliation any longer over to indirect. So that's a real big boon for organizations as well. But these are required by all nonprofits. So I do have some examples of some of the statement formats that I just went through and talked about in terms of the financial statements, so I'll share that after this slide. So what's the timing of all this? Well, the FASB has historically been very good about providing advance notice and leading time to implement these changes. And this latest update is no change from that. So calendar year organizations, you have to report on this starting with your calendar year 2018. So right, you got a nice amount of time to get all of these implemented. Fiscal year, if your fiscal year is beginning after December 31st, 2017, so for example, probably 80% of our clients have a June 30 year end. So your July 1st, 2017 year would be the first fiscal year that you'd have to generate this. Now you can adopt these changes earlier, and that's fine. But you do need to apply in the first year, retro first year comparison. So when you do turn them on, at that point you're going to want to present, if you're doing it for 2017, present your 2016, financials. So, but you can omit disclosures about liquidity and available resources, one of the other two disclosures that I previously mentioned. So let's look at some of the slides. And this is a little difficult to read, but if you get a copy of the recording afterwards, hopefully you can blow it up a little bit. But basically what this is showing is this is the statement of activities, and the highlighted areas are basically breaking down the changes in net assets between with donor restrictions or without donor restrictions. So the two classifications of your assets, most of our clients do a columnar format, and that's the next example I'm going to show. But you can do this format where it's one page, one column format. You do have that option. Most of our clients don't do that. Most of our clients do this format where you're in the columnar. And you will notice I highlighted here net assets released from restrictions, and you'll notice there the detailed notes of what's being released and how it was released. And so you have some expectations and compliances that you have to do in your reporting and how you report things and how you track them. And a lot of organizations I know do this through Excel spreadsheets, and so I'm actually going to talk about some of that a little further on. This is a statement of cash flow, and here again I apologize. I know it might be a little bit difficult to really see, but basically it is very straightforward. It is allowing you to demonstrate what's been utilized, what's come out. So a more, I believe a much more clear, easier to understand format, and I'm hoping organizations will embrace the changes, especially to the statement of cash flow, because I really think it'll help organizations. This example here is an example of a note disclosure. This is donor restricted net assets. And so basically it's just giving you an example of what a note might look like, where you are identifying what are the program activities, what was the purpose for them, by programs. You have Program A activities, Program B activities, how much was being released for each of the various activities, for each of the different funds. And here again, I'm a big proponent of automating all of this. This should be coming out of your software. You should be able to maintain this all in your software. So one of the other things that I always like to include here when we're talking about compliance and reporting is around the UGG. Excuse me. I always like to mention this. Probably here again, 80% of our clients are grant funded, and so they are impacted by this. And if your organization gets or wants to get federal money, or federal money that's flowing through your state or county, or even from another nonprofit, the UGG applies to you. And the big thing here that I try to keep in front of organizations and clients all the time is about internal controls. And along with internal controls is basically having the right policies in place and the ability to manage and oversee those policies and the compliance without having to jump through a lot of manual hoops and a lot of manual schedules and things like that. And here again, I am all about automation and a big proponent of the fact that your systems, you should have as much of this automated as you possibly can. So, for example, your policies. One of the requirements is that you have to demonstrate that you have a comprehensive approach to compliance in place and that all of your staff and vendors and contractors are aware of your policy. Now what that means is, you would want to have shared with all of your vendors or your contractors or your consultants what your policy is, and then have a way to identify that you sent the policy to them and that they signed the policy and returned it back to you. And now for me, all of that should be maintained in an automated system, including the signed paperwork, and there should be alerts that identify you sent it out. Oh, we didn't get it back. It's been 30 days. We haven't gotten it back. Payments might be held to that vendor until you got it. All of these kind of things can be automated. So there's more and more requirements being put on nonprofits. And because of that, if we can't automate, then it's going to make it harder and harder because you're going to end up having to do it. So if you don't automate it, you're going to be doing it manually. So what are some other regulations to be aware of? Well, aside from the standard accounting standards for the financial statements in FASB, one of the number one other items that clients are speaking to us about is everything around management of personnel. Number one expense that a nonprofit organization has is personnel. And over the last couple of years, I think probably everybody on this call knows how much has been coming down and hitting every organization around personnel. And so including this slide here just to give a little bit of an update for everybody. Almost every organization we talk to are challenged about the Affordable Care Act. And here again, you can and should have this automated as much as possible. I'm going to apologize. There's a typo. FSLA is incorrect. It is FLSA, and it's Fair Labor Standards Act, so I apologize for the typo. The last time this was updated was in 2004, and it was had an effective date this year, but now it is on hold because there's a temporary injunction in place, which is a good thing. And the injunction is because the court has to determine whether the Department of Labor actually has the right to determine what the minimum salary should be for the basis of overtime. So basically, if you haven't heard about this before, the Department of Labor had set a threshold that was last updated in 2004, and they basically raised the threshold from $455 a week, or annual salary of $23,600. They raised it to $913 a week, which is a little shy of $48,000. And what that means is, and this impacts every company, JMT, we were impacted. We had to go back and look at all our staff and see who fell under the threshold of the $47,000 and change, and what overtime rules we had in place, and how we were managing them. And we have all kinds of policies. People can't work overtime unless it's approved by their manager. But even if that overtime wasn't approved, if they worked it, we have to pay. That's what this new rule would happen if this new rule passes. And right now, as I said, there's a temporary injunction on it. So this is a really big one. And so, I want to bring it out there because I want to make sure everybody's aware of it and what's going on there. The other, and there are a whole bunch of other general HR changes that are happening in terms of flexible spending account and health savings accounts and retirement, minimum wage going up. And the key thing here is I am a big proponent of financial management being all of the back office management within an organization. So of course payroll and HR falls under financial management, not just accounting. And so when I think about the standards and financial management within an organization, I am including all of this. I need to have visibility into all of this. I need to see what the impact is going to be to my organization. And so I'm including it here because I do think it's something that everyone should be looking at and being aware of it. Okay, so we have a question in terms of a nice poll. And so what I'd like to know is if you've started planning or implementing anything within your organization to meet the new requirements. And so if you can just go in. And we'll see what we have. So I think our polling question may not be working. So, well, I can share, we had sent out a survey previously to nonprofit organizations, and on average about 50 to 60% of the organizations that we had reached out to had said that they were aware of the changes and they had started planning or implementing some of the changes. So I'm going to go with the hope that we're somewhere in the same range and that we're all moving more aggressively towards trying to get ahead of all of this. So the other thing I wanted to talk about is where is the nonprofit sector moving? I am a huge ice hockey fan, and one of my favorite players is Wayne Gretzky. And he has a quote that I have always found to be amazing, and I try to really operate my company this way and look at all of our clients the same way. And basically, that's a very forward-looking view. Often we're dealing with the day-to-day, and so basically we also want to have a look forward and say, where are we going to be a year from now, 2 years from now, 3 years from now? So this is a really huge one. More and more we are seeing that accountability and transparency are key. Our donors and funders have higher expectations from us, expect meeting higher compliance requirements. They want to see what we can provide them in terms of outputs and the impact of what we're doing, so true outcomes from the work that is being done. And we have to really look at, here again, when I talk about financial management, I'm looking at how can we get this view of what your organization is doing and how it's doing. So, and this is all around, we know funding, I mentioned compliance, it's increasing. Everybody is talking about dashboards now, and they should, because a dashboard with information presented in the format that a program manager can understand and read, can project forward so that it's not just a snapshot in time, is huge. Non-financial information, not just dollars on a financial statement, but metrics, outcomes. These are hugely important. And then of course, system integrations. Rather than having 5 systems that don't talk to each other, have 2 systems that talk to each other seamlessly, or have 5 systems that talk to each other. But they have to talk to each other. And the key thing here is also about perpetual performance improvement, perpetual performance improvement. I had this word on the previous slide. It used to be, what do we do? What data do we have? Snapshot. But now more and more, it's not just that snapshot in that given moment in time. It's a trend of that snapshot back 2, 3, 4 years. How is this program doing? Are we achieving our mission as we anticipated we would? If we invest or expand this program, will it help the recipients, our clients? What are we doing? Why are we doing it? And then how do we use this information to go forward? And this is really, really key. And so here again, when I talk about financial management, I'm very much talking about using information and not having it just be a snapshot or just having a system being a repository of data. How do we use that data? So what do we need to do? That's a really clear question. Well, the first thing is related to the ASU 2016-14 and the financial statements. I really can't stress strongly enough, your organization's board and management really have to be clear that you are responsible for your organization's financial statements. And that includes just what I have here, these 3 points. It includes the design and presentation of the information. It includes how it's prepared, generated, captured, and it has to be free from material misstatement, whether it's due to fraud or just simple human error. When we look at financial management systems within an organization, we really look to determine how the system meets the requirements for this. How is a piece of paper flowing through your organization? And that's really what you have to look at. So you have a number of different things that when you're thinking about your organization and financial management, not just accounting, but financial management, you have to think about who are the various constituencies that are looking at the information, what visibility is there to the information, what information you're capturing, what kind of alerts do you have. All of these things have to be considered. The big thing is your system should be able to provide you information about your organization, not just in a debits and credits financial statement format, but also in any kind of, as I said, metrics or statistics, graphical presentation. A lot of times you're doing this already as a function of, say, an annual report, but I'm sure many of you know how much time and effort goes into producing a manual report. Well, what if you had that information available to you every day on a dashboard, and you could see how a particular program was operating, how the funds from a particular grant or contract were being dispersed, and it was up to the moment? What better decisions could you make? Almost without exception, every organization that we initially start working with pretty much has so many of the same challenges. The flow of paper and their internal processes are very paper focused, they're very manual, and they have many potential breaks for internal control. They have very little visibility to really where their cash is, primarily because they, the commitments that the company may be making and that individuals within the company, program managers and people on the line, they don't have visibility. The top level doesn't have visibility to what's going on at the bottom level until an actual invoice is received, and now it's too late because the money's already been spent. There's allocations. How many times we speak with organizations and their allocations have to be redone numerous times, and they're very extensive and done in Excel. So these are challenges that occur with every organization. So I have another polling here. I would love to hear how confident you are that you have the systems in place that you need to manage and meet all the different sort of things we've been talking about. So let's wait a moment here and see how we are doing. So here again, this is very much in line with what I see typically. So I'm sorry to say, misery loves company, but it's not a fun place to be. So you're not alone. We see this all the time. The key is really getting a view of how do you get out of this spot. So one of the things that and I've talked about this really quickly, lack of visibility, limited internal controls. So one of the things that I'm a very big proponent of is really doing a review of your business processes and basically how does a piece of paper flow through your organization? How is a commitment made? How are funds dispersed? And really sort of understanding that process. And that's the start of it. And from there, you can then identify what it is. And you can start to change these things. And it doesn't have to be this humongous effort that is going to take thousands of dollars and months of time. It really can be done in small bites. But the key thing is to get started. And I can tell you absolutely the systems that are out today are amazing. And so they have to do more, and they are doing more. So they are providing internal controls. They are providing the workflow automation. And basically that's all the approvals for all the different things that are being done within an organization. Document management, so you're not chasing paper down all over the place all the time. And smart events and rules and things like that. And here again, this is this internal control. If something changes, you'll know about it right away because the system, as soon as something changes in a system, you're going to get notice of it without you having to do anything at all. Imagine getting an email that someone has gone in and changed an address for a vendor or a contractor or an employee, changed a dollar amount for an employee's pay. Nothing can be approved if it's over this certain dollar amount. These things can automatically be automated. Did we get the contract back and signed? Yes or no? These are the kind of things that you really can change. I mentioned earlier about the responsibility of your organization for reporting. Your reporting really should come out of your system. If you're spending time in Excel, and I know probably all of you on this call are, you really need to look at that and really understand the value and benefit to your organization of being able to click a button and get something out of your system automatically versus spreadsheets. I love Excel. I'm sure most people on this call love Excel as well. Great tool, but we are addicted to Excel. Our first thought when we think about anything is, oh, well, I've got an Excel for that, or let me create this in Excel. Let me look at this in Excel. And this is a very dangerous habit to get into. And it's also, so it's very risky for your organization, but it's also such a time sink for your organization. You are eating up time in these spreadsheets. I read a very good analysis recently, a survey recently, and it talked about the typical CFO and controller uses an average of 14% of their time in Excel. And that's the average. And you're talking about a CFO and controller. So can you imagine what your team, if you are at that level, what your team, line staff are spending if you're at that level? And this is not a good place to be. So it's very expensive for your organization. Now, here's the areas where we see most organizations using spreadsheets. Basically, it's reporting, whether it's their whole financial statements, whether it's a board packet, funders. You're using it for reporting. Our clients are also, we see that they're using it for allocations, budgeting, tracking purchasing, logs, reconciliations, all of these. And all of these things can be automated easily. And I'm not saying that lightly either. So you really want to look at what you're using spreadsheets for and what the cost of them is for your organization. So here I'd like to know if you're using spreadsheets for reporting, any kind of reporting within your organization to any level whatsoever. And let's see what we have. And I don't think I'm going to be surprised by these results either. So I think you can see almost without exception and I started the conversation off with this. This is something that we know. We're very experienced about. And this is really costing your organization quite a bit. If you want to really, if you took, and this is what I tell clients to do. I say, take your finance department and ask them to just keep track very lightly. What are the Excels that they're doing as part of your monthly activities and how much time they're spending on them? And then you just get that tally. And now you take that tally and you just simply apply. You can do it by employee or you can apply it for the department as a whole. What's your average labor rate? And take that, and that's the cost of those spreadsheets to your organization. Now, imagine if you eliminated that. You're not going to eliminate it 100%. That's unrealistic. But if you eliminated 50%, 70%, and you brought those dollars back to your organization, how would you use those dollars and or that time, that gained time? So this is really key. So I am a huge proponent of the cloud. JMT actually, back in 2009, I made the determination. This is what, I have that long view. I made the determination that the cloud was really going to be of the best benefit to JMT, myself, and our company, and to our clients. I view the cloud as the great equalizer for our clients. Historically, nonprofits have been 5 to 7 years behind in technology, and that's because you just can't afford the investment typically needed for infrastructure. Buying those servers, buying that new operating system instead of being on SQL 2003 or 2008, making sure that you're up at 2012. The Word, the Exchange, Microsoft Exchange. This was a huge investment, and our clients just couldn't maintain it. And so what's occurred over the last 3 to 5 years is now organizations have recognized the cloud, have found the cloud, and because it eliminates all that. Now a nonprofit can have the same level of technology as a Fortune 500 company can. And it doesn't cost you, you could be thinking, oh, it's going to cost me a Fortune 500 cost. It doesn't. It doesn't. So I say to organizations all the time when they reach out to me, they're thinking about doing something. I say, rather than purchasing equipment to support old systems, you are better served taking your limited dollars and buying lightweight tools such as tablets or notebooks or smartphones and taking advantage of rich cloud technology. So, I mentioned about workflows and automating, and this is huge. Imagine having visibility to what's going on in your system automatically without having to be sent an email or having to find out about it on your own or having it come up in an audit. This is the new systems. This is what they provide you. Old accounting designs, the linear charts, the having to do attributes and special groupings for reports, or you want to see statistical information side by side. All of that is eliminated with the new systems. Dashboards, I mentioned dashboards earlier. Software needs to serve all the constituencies in your organization so that they can have the visibility. They're not coming to you asking for, how did this get to this, or that number get there, I don't remember spending this. Imagine if they had the visibility to see that themselves. We believe in providing information and visibility to people throughout the organization, and that it's real time, it's accessible, and it's the information that will really resonate with the reader. And this is in the format that they need. And what we've found is a snapshot at this moment in time delivered 30 or 60 days after the month ends is doing a disservice to your organization. And so many of our clients talk to us about this, about their concerns about the readers not being able to understand the numbers or it creating more questions. And I'm telling you, that doesn't happen. It does create questions, but it empowers the reader and it engages them, and now it gives them the information they need to make the decisions as they're managing their programs and their grant dollars. Visibility is really, really huge. Automating time and expense. One of the biggest things you can do right out of the gate to improve and get an immediate gain for your organization is automating your time tracking, your expense management, your expense reimbursements, your credit card, corporate credit cards. So many clients, when they first reach out to us, these are all manual systems. These can be automated very, very quickly, like literally turned on in a week, and for a very manageable cost. And you can get a home run, an organization can get a home run out of something like this very quickly. And so this is something that's really, really huge, especially time tracking. Workflow approvals, I mentioned that earlier. You really want to have your system be automated for your internal controls to ensure that whatever is happening has the right level of approvals, and that it's not a bunch of paper and email approvals, but it's an automated with a audit trail, so that you can see at any moment in time what is out there and being requested, what's being, who's approved it, what level of approval it's in, and that if there's any question, you can easily demonstrate through any audit that you're properly tracking all of this. And so this one here again with compliance is huge, and this is automation. If you're in a paper-based system, here again, there are systems that can automate this process for you so that you have visibility to the information. So in summary, I'd like to thank you for attending. I want to here again thank Intact for being a sponsor for it. I will share with you that Intact is really excellent. It is a truly automated system that does, so many of the things that I've spoken about. And if you have any questions, you should definitely go and check it out. So let's see, questions.
Thank you, Jackie, for a great presentation. We have some really interesting questions. The first one is that it's been estimated that nonprofits spend about $12,000 a year in compliance costs. And with all the changes that you're suggesting, how much should an organization budget to meet these increasing demands for visibility?
Well, first off, I'd like to say that it's interesting because my experience has been with organizations that number is actually even a little higher, John. So all of this goes to what I was talking about in terms of automation. If you're automating, if you took that $12,000 and you made the investment in automation, then a good portion of that $12,000 would now be working for you, and the other, the remainder could be reinvested in the organization and the mission and all of that. Because remember, you're reducing those costs of compliance if you're automating it.
Right. Do you recommend real-time 24/7 visibility on these financial statements? Because some of the participants said that, are all constituencies, whether they're board, staff, regulators, should have equal access to all the information, or should there be separate displays for different constituencies?
So because of the ease of using the technology today, the technology today is a real big game changer. So I am 100% proponent that there should be different views and formats depending on who the recipient, the reader is. So the view for a board member could be much different than the view for the CFO, which is much different than the view for the program manager. And the first thought that a lot of organizations, when I talk to them, think about is, oh my gosh, this is going to be a bear to manage. But here again, it's not, because the software is doing the work. Basically, you set it up one time, and then the software goes forward from that point forward, and it's doing what you need to do. And you can modify it, you can add it. But I'm a very big proponent of real-time visibility, because remember, especially your program directors and managers, they're making decisions every hour of every day. And they're making them in a vacuum if they don't have visibility to where they are. And so if purchases are being made and they can't see what money is impacting their program or where their grant dollars are, it's very hard for them to manage effectively, and then for the organization as a whole.
We have several questions related to the ACA, and they're both grouped around what is the minimum employee size that ACA affects an organization. I mean, one participant actually said they only had 2 employees.
Okay, so I am not a HR specialist, so unfortunately I can't answer that question. I can certainly provide some recommendations of some HR specialists that we rely on to answer that, but I wouldn't know the answer to that question.
You were showing one slide about the need to display net investment expenses, but mentioned that detail wasn't required. Why isn't that? Isn't it important for people to see the expenses in detail for their investments?
Well, the FASB is, what they're saying is in the financial statement presentation, the summary, that they want the investments to be shown net, the net amount of the expenses, but you still have to maintain of course your records of what makes up that net number. And and here again, there is a link to the ASU 2016-14. The report is like 270 pages long, but and the examples of those statements that I shared are in there. I really would recommend if you're not going to, if you don't get a chance to speak to your accountant, you don't want to wait to speak to your accountant, your CPA, you could certainly go and review the statement, and it'll actually it gives examples like I shared for the note disclosures as well. But you do have to track all that information.
I'm afraid that's all the time we have for today. Jackie, we want to thank you for a very informative, in-depth look at all the accounting changes that are facing us. I want to thank the participants for their patience and asking really great questions. And this ends our session for today.
Thank you, everybody. Thanks, John.
Thank you.
Ladies and gentlemen, that does conclude the webinar for today. We thank you for your participation and ask that you please disconnect your line.